course be published to YouTube. So more or less, if we guys start off by just it's recorded. It's recorded, so no worries. So more or less, if we just start off, all right. If we just start off by going through what I said in the previous talk, I highly suggest y'all going back and listening to my overall bias, all right, and what I said in it for everyone. I published it on YouTube, all right. Published it, I think 5 days ago, or something. All right. And you know what I've said. I've talked about many things, and that's why I suggest y'all to just rewind it, because how you all watch the videos, it's very important, because you maybe are looking at or just hearing what I'm saying, but you also have to look in the charts and actually see what I'm showing you. All right, right now, look what I'm showing you. Like, we're in the market maker buy model. All right, look this right here. All right, and I'll spill a lot of sauce to next week, guys. A lot of sauce into what's gonna happen next week. But we'll do that call on Sunday, meaning we'll do the call on Sunday before the market open, pretty quickly, and I'll publish that on YouTube as well. So we'll more or less call out all the weeks together, because it's not only me calling out the weeks. It's that we're doing it together, which is, you know, the thing. It's a tradition in the server, you know, calling it out for everyone publicly for free all weeks, every weeks, for the entirety of the year. I've done it for this whole time. All right, and just it's all out on YouTube. All right, and yeah, let's go into what I more or less stated in this week and what has actually happened. All right. So exactly, gotta call it every time. All right, how you utilize my analysis is that you utilize my analysis if it aligns with yours. Meaning, if mine and yours is the same, then stick to more or less use mine as a confluence. That's one thing you can utilize it as. All right. Second thing, if you all have a different opinion or different more or less perspective than me on the market price, right, then stick to your own, because at the end of the day, everyone can be wrong. Right? So if I'm wrong on anything, right, it's better for you to be right with your analysis rather than you coming to me and saying I was wrong. All right. However, that has never happened. but literally, all right, what you should do is stick to your own analysis. I don't care if I'm right. I don't care if I have 90% win rate. I don't care. All right, because at the end of the day, how you become profitable is by following, all right, yourself and following your intuition. All right, your goal should not be here to sit here and listen to me. Your goal should be that I'm gonna do it myself. All right, I'm gonna be the one who does the analysis and who predicts the market price. That's what your goal should be. Your goal should not be, oh, I'm literally yeah, good Mercs. Then I'm seeing you making progress, bro. So your goal, all right, is not to sit here. Your goal is to do it yourselves. Anyways, without further ado, let's go into it. So more or less, what I've talked about is that we went into the monthly. All right, what did we talk about with the monthly? We talked about this BPR. All right, what was this BPR? We had more or less we needed to reprice lower, right? We talked about that we needed to reprice lower. Why did we need to reprice lower? Pretty simply, just because we needed the algorithm to take out sell side liquidity, all right, to accumulate sell side, all right, so we then later can take out buy side, because you have to realize what ICT says is totally true. All right, what the market always needs to do is that the market needs, the IPDA needs, all right, to take out liquidity. It needs to go from liquidity pocket to liquidity pocket. And what does it do? It engineers liquidity so it can go to a specific strategic point, which is already outlined on the charts. Meaning everything can be predicted in the future. Nothing is random in the markets. And I'm proving it every day, right, to my students and to everyone that are willing to listen. All right, because you have to realize, ICT, I can't trade. All right, prove it. All right, then prove it. That's more or less what you have to do. So more or less, all right, what the market always needs to do is go from liquidity pocket to liquidity pocket, right? Because it always needs to go to a strategic point. So how do you find these specific liquidity pockets? I've already talked about define these specific liquidity pockets pretty simply by looking at where all the deviations are aligning, right? Because the deviations at the end of the point is more or less mathematical constants, all right? And those mathematical constants are often where the IPDA needs to go, first of all, and that's where you can use it as the drawn liquidity. But the thing you can also use it as is more or less as a reversal point, because you have to realize that all of these deviations, the market is attracted to them, all right? And why is it attracted to them? It's attracted to them so it can go to that specific point, all right? Because the specific point is already pre-planned. Why does it need to go to a specific point? Because it needs to take out that specific liquidity to that. It's like a pathway, all right? It's like water, so it needs to go there, all right? We can go there on a, like, it can go there in different ways, all right? So we can take the right, we can take the left, all right? However, it needs to go there at the end of the day, and that's how you find more or less the low of the day, all right? And when we have done the low of the day, you have to realize, because what you guys should focus on more is time rather than price. So don't focus on the price, instead focus on the time, because you have to realize this is totally true what Day says. Day says that they can manipulate price, but they can never manipulate time, and this is totally true, all right? ICT, I ticked today at high. Yeah, bro, I did the same thing. But you're a goat, Enox. All right, you're a real goat, real OG. All right. Yeah. So what you have seen here. All right. Let me just take an example. So what you have seen here is more or less that the markets. All right. This is a very good example. Right now, I'm gonna spill what is gonna happen for the rest of the year. All right. So more or less, as you guys can see, we have a specific liquidity pocket right here. We have all the deviations aligning right there. So what did the market do? It maybe did not go straight down, all right? On a monthly it did, but like if you look at the daily, it did not go straight down, right? It took a path down to here. And we are already talking about it. We have spoken about it multiple weeks, all right? That all of the deviations are aligning here. Why is all the deviations aligning here? Look, guys, this is sauce. This is pure sauce, all right? Pure sauce, guys. Wait. Let me just fix my headphones. Yeah, so more or less what we have talked about, all right, for a long time, all right, is more or less that all of the deviations was aligned here. Why was all of the deviations aligned there? Because you have to realize we have 50% mark of this BPR, all right. We have the top of this original consolidation. This is not original consolidation, I'm upset, but this is the original consolidation. This is just a reconsolidation, right? We had, if you look here, inverse fair value gap. All right, what specific point did we have here? 75% mark. All right, so open, top of this, 75% mark. We also had this BPR, right? And if you go to the daily, we also had a fair value gap right there. So here, at the specific, if you divide everything into quadrants, where is the most quadrants aligned? All right, where is the most quadrants aligned? And where the most quadrants, because I have to realize all the PDAs can be divided up into quadrants, all right? And where the most quadrants align, that's where the market will go, and from there it will reverse. So where all the more or less PDAs are aligning, if you divide it up into quadrants, then you get a specific level, and that level, all right, is more or less, you don't even need to realize, you don't even need to backtest it. You can more or less just check my YouTube, and I've talked about this for three weeks, that we needed to go down here to exactly this level right there. And look what we did. After we went down, reversed, bam, specific level. I called this out, guys, for everyone. This drop, this specific level, called it out for everyone. So that's more or less it. Why did we need to go down there? Because you have to realize we had a liquidity pocket with this monthly fair value gap right here. All right. How do you split all the? It's good. We can take questions later, but I'll just answer this pretty quickly. You just do this. Deviations, bam. So you have a fair value gap, divide it up into quadrants. All right. You can do this with order blocks. You can do this with swings. You can do this with what are inverse fair value gaps. You can do this with consolidations. You can do this with PDA matrix. You can do this with trying to find the equilibrium, and then you can just divide it. Like you can divide everything up into quadrants, and the quadrants you can divide it up into halves. So more or less, if you have a quadrant, we take like quadrants from here to here. This is what I had in the video. From here to here. Look at this, guys. But more or less, all right. Let's not talk about this. This is not for you guys. So just take it down here. All right. This is a quadrant, right? So I have different quadrants, but you can also divide from here to here quadrants. Right, and look at here. This is more or less premium of this, and then we more or less reprice even lower to where 25% mark, and that's where we're going 25. And then what are we going then to 1? I'm not gonna talk about this, but you can divide everything into quadrants, and the quadrants you can divide up into halves. So more or less all quadrants you can divide up into halves as well. Right, and you can even divide up into quadrants as well. However, I don't like to go up into quadrants on quadrants on quadrants. That would be like too more or less not really that accurate. It would decrease the accuracy of the whole thing. So I like to just use quadrants once. However, you can divide it up. All right, and all of this is not from me. It's from ICT. All right, I did not come up with this. It's from ICT himself. All right, so please watch ICT. It's not some sauce. All right, like I'm totally lying to you when I said sauce. It's just ICT. Like, guys, don't watch TT trades. Go and watch ICT, and you would already have known this. All right, don't be lazy, guys. So yeah, we had a liquidity pocket here. Where did we need to reprice to? We need to reprice to where all the deviations are. All right, and where? Yeah, we'll talk about that. We'll talk about that later. ICT apps too much. That's total bullshit. Yeah, and then more or less what we did, all right, is that we went down into all of the deviations, like I called out. All right, went down to all of the deviations. And where do you guys think we'll go next? To the next of the deviations. All right. So where do we want to go then? Where did that more or less? Where's the mathematical constant? All right, not mathematical constant, but it's just where all of the PDAs align. All right, where do you guys think in this chart? All right, so more or less what I'm thinking is that we'll go higher. Why? Because we're in a market maker buy model. All right, and that's more or less what we're going to see. We're going to see next week CPI, listen to this, guys, being bullish on the DXY. So CPI next week is going to be extremely bullish, taking this original consolidation high. All right, I'll not talk about why. But for example, all models as well, or not models, because people would literally think market maker, all right, market makers is a model. It's not a model, guys. Market makers is not a model. It's an bias. All right. Yeah, CPI is going to be bullish for everyone. All right. Next week, definitely bullish. All right. Is how the market works. Exactly. Market maker models is how the market moves. It's one of the programs the IPDA does. All right. One of the programs the IPDA does. All right. So more or less, what you guys can see here is that we have a new week opening gap right here. All right, we also have this 75% mark. That's 2 deviations. I'll not talk about the rest of the deviations. But when we have repriced down here into more or less what we've done, and now this low is going to stay intact. Next week is going to be boo, run up here, and then we're going to start the downwards movement. I'll not talk about where we'll go. I've already spoken about it multiple times. Anyways, let's just go into the lower time frames and talk about this week. So now I'll just talk about the whole picture. But more or less, I've called out all of this live. If you don't believe me, just very quickly go to my YouTube and watch, which I highly suggest you all to do, because right now you're just thinking, oh, but he's stupid. Like, he's just a stupid guy. He knows nothing, literally. because you have not heard what I called out for. Hopefully you guys which are here today, which I think you goated the people which actually takes your time and actually listens, the 50 people of the nearly 3,000 people in my server, which actually takes the time and going in here and listening to me yapping. All right, I'm really happy for your sake, and I hope, all right, I hope you guys also were in the last call, and in the last call, in the last call, because then you don't think I'm a real, more or less, yapper. All right, right now you're thinking I'm a yapper, but if you think I'm a yapper, please go and check my YouTube and please check me, like check me up, guys. Check me up. Check my P&L. Check everything. All right. I want you to do it. All right. That's good of you doing your due diligence. All right. And that's what I like. All right. I don't like stupid people. I don't like 9-year-olds, which we have a yapper chat for. All right. We don't need any TT traders in here. All right. We only need good goated people. I don't care about what you trade. I don't care if you trade support and resistance, blah blah blah. I just care about if you're professional or not. All right. If you understand the markets, you can stay here. If you don't understand the markets, you can go. And if you're up to learning, all right, then stay here. If you want to become a professional, then stay here. But if you are a 9-year-old and want to stay a 9-year-old, then leave, please. All right, or we'll kick you. All right, no TT traders, no 9-year-old traders in here. All right. Yeah, more or less. Then we go to Monday. I'll answer all of the questions later. So then we'll go to Monday. Where is Monday? Oh wow, this is just perfect. So on Monday, what did I talk about? I talked about that we would see bullish prices. All right, and I think you all should go and watch my video. It's here exactly what I said. I don't really remember exactly what I said, but what I think I said was that we would reprice lower, manipulate first, create the low on more or less Tuesday. I got that wrong actually. I think we created a low of the week on Monday instead, and that's why I'm thinking we'll take actually. We'll go and take these relative equal lows. Now I'm talking about the things I'm going to talk about on Sunday, but this is just sauce for you guys still. So I'm thinking we'll go down with repricing here, like we have already done. Engineer liquidity here. Why do we need to engineer liquidity? Because we need to take out another point. Why do you think? All right, now I'm asking the audience. All right, why do you guys think we create relative equal lows and relative equal highs in the market price? Just write in the chat right now. Write in the voice chat. I need to hear your opinion. Exactly. Yango. Bro, you know. Yango knows. Literally. He's a goat. Not gonna lie. Exactly. It's just to create more liquidity so we can take out a high liquidity resistance zone. Alright? So if you have a high liquidity resistance zone in one given area, this is sauce. This is what I teach my students. Alright? This is the only thing I'm gonna share, students. Alright? So don't be sad at me. Alright? But if we have a high liquidity resistance zone and the market needs to travel to a certain drawn liquidity. Drawn liquidity can be multiple deviation aligning, can be relative wise, whatever, right? But if you have a high liquidity resistance zone and the market needs to trade through that, what the market will do often is engineer liquidity, and engineer liquidity means more or less creating relative equal highs, relative equal lows. So we then can trade through, because you have to realize over that relative equal highs, relative equal lows, it's an extreme amount of liquidity, all right? And when we have taken those relative equal highs, then we have enough liquidity to push up through the high liquidity resistance zone. So that's more or less what TT trades don't teach you. It does not teach you when you create relative equal lows, when you create relative equal highs. Alright? Exactly, Yango. You got it completely right. Yango is an experienced ICT trader, I've noticed. He's GOAT, not gonna lie. He's a charter ICT member. Alright? I think the heat maps and shit like that does not work. I don't think it's lagging, I think it's total fake, because I'll explain what liquidity really is in the market price and why it's total fake, at least on the FX market, it's total fake. Exactly, engineer liquidity, we always create liquidity. The market price always creates liquidity, alright? for the market to trade to a specific point. So the market always is strategic. You have to think about it, because they trap people, so they then can take them out and go in one given direction. All right, and often that's following the higher time from order flow and going to drawn liquidity in the same direction. I'll answer questions later, so just keep your questions in your head until I finish this. So more or less, I'll answer questions later. We'll just quickly go through this. So what is what I said? Create the low on Tuesday, like we usually do. Actually, we did not do it. We created it on Monday. I called this out. Why did we trade lower? Because this was the level I called out, but I specifically called it out on. I said this would be on Sunday. I called this out and I said we would create this on the London Open on Tuesday. Why? Because then we have price being the weekly inverse Favag gap. Let me just take a drink of water. Sip of water. So why did I say this? I said because Tuesday London Open is usually where we see the low of the week forming. So the low of the week you can usually anticipate on London Open, and this is not something I created. This is ICT. All right, this is not something coming from me. All right, just watch ICT, guys, please. This should be well-known knowledge. This should not be sauce. Like, it should not be sauce at all. This should just be for an ICT trader, normal. All right, so Tuesday time, right? Tuesday London Open time, all right, between 9 and 11, right? UTC plus 2, all right? We utilize UTC plus 2, and I'll explain why we utilize UTC plus 2 instead of Eastern time. So more or less right here, all right? We saw this trading lower. I called this level out. However, I more or less waited for time and price to align. What we saw, low of the week, I took a trade right here as well. Actually, I took a trade right here. I did. Wow. I did not quite remember. Wow, I've taken actually 2 trades this week. That's crazy. So we took this trade. All right, I was out here before the news, I think, before the news drop. So I was out, I think here, more or less. What did we do? Engineer liquidity. Why do I have engineer liquidity now? Remember what I said. All right. So right here, low, right, and then we traded higher. We could have I could have held this trade for more or less nearly the entirety of the week. However, why I did not do it? That's pretty simply just because I more or less wanted to get out on the news. I think the news was what was the news? Man, I don't quite remember. Yeah, but like I wanted to get out at least. So that's more or less what I did. And yeah, more or less, I think I called it out. So you can go to announcements right now and just check it. I'm 99% certain right here. I called this out. And then more or less what we did, traded higher. So more or less what I said in the video. What did we do? We did loads of things, but I'll not talk about them. I'll just state what I talked in the video. Then I said Thursday is going to be the high of the week. More or less Thursday was the high of the week. Look at this. And then I called out this news as well. Blah, blah, blah. Lower, right? Pretty simple. And then more or less what we did. So we went lower. And yeah, I took this short down right there. And then I took some partials down. And then more or less I did not take this higher. We could have taken it, and then we repriced into here, and then we went lower again. Like that's more or less it. Like nothing special. Like look, I can give you an example. So where we engineer liquidity, like I talked about. So we have engineered loads of liquidity. All right, this week. So let me just talk about. Yeah, we can take an example that has not happened yet. I'll already talk about this on Sunday, right? So more or less right here on Tuesday, what we did was that we engineered liquidity. This is relative equal lows. Why do you think we engineer liquidity? All right, look here. We have a high liquidity resistance zone right there. So what do you think we're going to do? Do you think we're going to take out this? And when we take out this, we have a liquidity here. And then we're going to take out this. Why are we going to take out this? Because I think the market needs loads of liquidity. Right? That's why it's accumulating liquidity, and then it's going to have a manipulation and then distribution, like normal power 3 up until the strong liquidity. So that's pretty simple, guys. Pretty simple. Now let's just go to EURUSD and just talk about the week. So more or less just talk about weekly. So more or less weekly, I've talked about this order block right there. I've talked about the monthly that we're just manipulating right here. So this more or less the high of the month. Why is this the high of the month? Use ICT wick theory, divide it into quadrants. You can see 25% mark right there. Reached into the 25% mark with I think it was FOMC. I think no, I think it was PPI or something. Yeah, PPI right there, and that's the high of the month. We're not gonna take that. Instead, we're gonna do more or less reprice. We accumulated here, accumulated next week. What are we anticipating? We're anticipating the high liquidity resistance zone to get taken on the DXY. What would that mean for EURUSD? Look, we have engineered liquidity here. Why do you think we have engineered liquidity here? We have engineered liquidity. We'll take that, and then we have enough liquidity to go lower. We might also, no, that's not for you guys. I will not talk about it, but you might be saw it right now on my screen when I'm talking about these things. So you maybe saw a certain thing. I don't think loads of people saw it, but that's some sauce for the people that saw it. Today we just dropped lower just because we took this relative wise and just dropped lower, accumulating even more. This is pure liquidity. Like this is pure liquidity because it's going to go higher here. Once again, take out this. We'll not talk about what we'll do. Of course, it will drop lower. And we'll talk about more or less what's going to happen on Sunday as well. More or less, let's talk about. Oh man, does this happen to you guys? I hate when this happens. That's super annoying. Literally when it happens. So more or less on Monday, I was 23.00. Let me just check that out. I said we're gonna go lower. Yeah, perfect. I just have here. So you guys can see this is what I was talking about. I said we're gonna go lower, and that's more or less what we did. I think it took this trade right there. Lower, right? And I think I was out. Yeah, I don't remember where I was out. I think it was like prior to the news. So I think it was like here somewhere. Yeah, that's more or less the short I've taken, and then I've also taken this trade as well, like higher right here. And then we repriced, took this relative wise before the news. Then we got time aligning where I got 16 right here, and then you know what happens when time and price is aligning. Bam, you get a pretty simple run. Yeah, like there's nothing special. Like I called this out. Go and check my YouTube video. Like quite literally exactly what I've talked about. Not this part, but next week I'll just say that we manipulate higher because that's more or less what we're gonna do, and then we're gonna drop lower. And how would you? All right, this is some sauce. This is something ICT would never say, but what I've noticed. So guys, if you guys just open up your ears right now, is that when you don't have time and price aligning. So more or less right now we saw the high of the week getting created on Monday. All right, when you don't get time and price aligning, all right, what does that indicate to you? It indicates two things. It indicates that next week, it indicates first of all, like if it goes in your favor, but it was not in the time, because you have to realize time is equally as important or even more important than price. So when you have not got, all right, time and price aligning at that specific price, right? Then you can realize that that specific high is just an engineered high, because you have to realize most probable highs, all right, is often created at the specific time, and when you have not gotten that specific time on that specific high, which you were anticipating on another specific time, all right, but you did not get it at the specific time, that means that that high is an imposter. That means that that high is more or less not going to stay intact. And instead, what the IPD has done is that it has manipulated, all right, because it has not followed its time schedule. So what does it need to do? It needs to reprice lower, grab that liquidity, and then grab that liquidity over the high. And what you can do later, right, is that anticipate that high to get taken, anticipate that high to be another example of engineered liquidity, and when that high gets taken at that specific time that you were anticipating the last high to get created. So now we were, for example, anticipating this high right there to be created on Tuesday. This high, exactly at this price, but on the DXY. Remember, this was not EURUSD. We thought that we would get this high on a Tuesday instead of Monday. What can you then more or less think of this high? And this was created at more or less New York lunch, I think. Yeah, New York lunch. Or no, this was actually prior to New York Open, right? 15:30, more or less. This is it's totally wrong time. All right, and that the price was aligned, but the time was not aligned, meaning it's an imposter high. And I'm not calling it imposter high. I'm just calling it engineered liquidity. All right, but that high is gonna get taken then. All right, and you get that clarified when we got relative equal highs right here. So what the market has done is more or less IPD, is that it has engineered liquidity over here. So we then can go higher, taking that and have enough liquidity to push lower, because ultimately that's where we're going. We're going down, 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 right? And yeah, I think that's actually it. I'll more or less talk about what's going to happen on Sunday, but now we've talked about more or less clarified what I've previously said. Look at this beautiful STA right there. But yeah, I think this is it, guys. I think this is it. And if you don't see it, that's my motto right there. Not perfect, but it works. Yeah, now I'll answer some questions. And of course, this will